Dangote Cement has reported a 51.7% rise in its half-year earnings per share to 6.37 kobo the current. The cement manufacturer saw revenues increase 29% to 190.7 billion now. And although the shares have outperformed the all-share index, currently up about 48% year to date, we review factors behind these numbers and the company's outlook going forward with Devakuma Edwin. He's the Chief Executive Officer of Dangote Cement. Thank you so much, Devakuma, for joining us.
Thank you.
Now we're looking at another set of strong numbers for Dangote Cement. Many would say, not surprising given all that you're doing in terms of expansion. But what are we looking at in these numbers? Revenue up 100 to 190.7 billion. Would you say was this an increase in trade volumes of sales?
Yeah, primarily there were two key drivers for these results in this quarter and in the first half of the year. One was, of course, the sales volume, and number two was also on the driving down of the variable cost. And one of the areas we also got a little bit of help over the previous first half was that we had more gas available during this first half, which has also helped us to reduce the cost.
Okay, let's talk us through your plans to increase production capacity. You're currently doing about 20 million metric tons. You're plan to increase that to 30 million by 2014. The impact this could potentially have on the cement space in Nigeria?
Well, one is the market consumption is continuing to grow, and unless we continue to keep increasing our production volumes, there could be a situation where a gap can come in between the availability and the consumption of cement in Nigeria. That's one of the reasons we have been trying to massively expand the capacity. And the other reason is, as you are aware, we are putting up cement terminals and cement grinding plants along the west coast of Africa and also along the Central African coast like Gabon and Cameroon. And these are countries where there is not enough limestone, and unless we have some export capacity available within Nigeria, we would not be able to meet these needs. The third alternative. We can always import cement from other countries and bridge it in, but we would like to have enough capacities here in the Nigerian market.
Well, ask you, I mean, you're doing so much expansion. Obviously, you're spending a lot more. Isn't that having any pressure on your earnings?
Well, because the expanded capacities are bringing in a lot of revenues, as you have seen in this year, compared to the last year, our capacities of production volumes have increased, and that has increased our revenues and increased our margins. So
it covers a gap wherever there's a gap in earnings.
Continuously,
okay.
Yeah.
Okay, well, talk us through also your plans to invest. That's the Dangote Group now to invest about $17.8 billion in the next 4 years. You're planning to build a fertilizer plant and, of course, going into petrochemical. I mean, these are two huge sectors, with a lot of potential for growth for earnings. Yeah,
again, these are areas where there is a huge gap between the demand and supply, not only within Nigeria, but for the refinery and the petrochemicals, if you look at it, and also the fertilizer. In the whole of Africa, there are very few refineries operating with adequate capacities, and the same thing with fertilizer. So we are investing in 2 trains of fertilizer to produce about 2.6 million tons per year. And these trains are the largest trains available in the world today. So we are going to put up 3,750 tons capacity, 2 trains for fertilizer.
So that will definitely make you the biggest player on the fertilizer space?
Yeah, biggest player in Africa. And we'll also have a complete bouquet of fertilizer. It's not just urea. We'll be going for NPK. We are going to go for single superphosphate, diammonium phosphate. We are going to go for potash. So we'll have a complete bouquet of fertilizer. In terms of refinery, we are putting up a 400,000 barrels per day refinery. That will be the largest single train refinery in the world.
Now, given the regulatory environment, and we know there's still a lot of uncertainty. The PIB is still well, it's past second reading, but that is still hanging in that space. So aren't you a bit concerned about how things could play out with your own plans in the sector?
See, the crude oil you can buy in the open markets, and the products can be exported if there is no demand in Nigeria. So obviously, this is ideal solution because the whole of Africa needs refined products, and we have crude oil available not only in Nigeria. You have in Equatorial Guinea, you have in Angola, you have Libya, because these sweet crudes are available in surplus today because of the LTP oil coming in huge volumes from US. So there is a product is available. The crude oil is available in the local environment, and the finished product, there is a huge market.
Now, obviously, your shareholders must be excited about all of these plans, especially to expand. Of course, we know that will be more revenues, more money coming in. So give us your outlook for, let's start with your earnings for the rest and a half of the year. What is your outlook for earnings before we talk about all that could come in the next 5 years?
The rest of the 6 months, we expect the earnings to be in the same line as we have done in the first half. Though the next 3 months, as you know, even if you see our forecast for the next quarter, we have gone slightly low because of the rainy season. But obviously, the production wouldn't go low, so the sales volume will pick it up in the last quarter. So our expected earnings in the second half of this year would be in the same lines. And we are planning this year to retain only about 30% of our earnings and give out 70% in terms of dividends.
Well, obviously, very exciting because I'm looking at your EPS up 51.7%. So what numbers are we looking at for your dividend payout to investors?
Obviously, if my PBT is going to be about 220, and as I said, it's going to be roughly 70% of the earnings is going to be given out as dividends.
Now looking at Dangote, obviously the stock price too has been going up phenomenally at the stock market. In terms of the outlook for where the stock could climb to, what are your projections?
Well, I wouldn't like to forecast how the shareholders are going to evaluate, but as far as I'm concerned, my shares are really underpriced today because this is a business where we are projecting to have more than 50 million tons capacity in the whole of Africa, and the EBITDA is going to remain the same in the whole of Africa on an average. And if today the business has not been given, the investors have not been given any weight for those additional capacities which is coming around Africa. So when they give the weight for that, the share price should be much higher than what we have today.